As you can see on the thumbnail, what I'm going to do in this video is show you how I predict the price for Nvidia on January the 1st, 2027 will be $226.52. How do I do that? Well, it's a matter of simple math. All you have to do is multiply their PE ratio on January the 1st, 2027 times their earnings per share, and it will come out with $226.52. It's that simple. You'll ask the question, yeah, but how do you know what the PE ratio is? Well, you have a historical PE ratio, and what that is telling you is how many years of future earnings is the market willing to pay for Nvidia at this time. And right now, that PE ratio is about 41. 41 years of earnings. And you'd say, why would anybody pay for 41 years of earnings? Because you're paying for future earnings. And Nvidia is telling you their earnings are going to go up anywhere from the 20 to 50% in a given year. And so once you determine that, you can discount future earnings and you come down actually to a much more reasonable PE ratio. But for figuring what it's going to be in the future, you use the 41. Okay, so how then do you find out what their earnings per share are going to be? Well, that's data, and that data is derived from the earnings calls that Jensen and CFO hold every quarter, and they make projections as to what's going to happen in their business and what do they see their GPUs growing to, and their profitability, and how are the gross margins going, and what is their competition. And you extract, and he extracts, and the CFO extract, this is what we think our earnings per share are going to be. Then Wall Street takes that and projects beyond that. So I can go to a data source, and it will tell me what Wall Street and Jensen collectively believe the earnings per share will be in 2027 and in 2028. I then use that historic PE ratio, and I can estimate that on January the 1st of 2027, Nvidia will be selling for $226.52. Now, how do I know what it's going to be selling for between now and then? I don't know what it's going to be selling for next week because I don't know what Jerome Powell's going to do. I don't know what Janet Yellen's going to do. I don't know who the next president of the United States is going to be. I don't know what Vladimir Putin's going to do, and I don't know what Xi Jinping's going to do. But if Jensen's predictions and Wall Street predictions are anywhere close to what they're predicting, the price is going to be $226.52. This is important because you want to find stocks where the CFOs and the CEOs and Wall Street believe this is a growing company. And if you can find the data, and that's what I've become good at, is finding, interpreting, and then extrapolating to come up with the prices. Now, why don't I do that for every stock? Because I'm only one guy. Okay, I'm not Goldman Sachs. I do not have 46,350 employees to say, go do this for all 6,500 stocks in the United States. I can't do that. I'm just not ready to do that yet. But I also know that Jensen and Michael Dell will be building me an AI factory, and this is all part of what I choose to call the democratization of compute. And what is compute? Compute, if you have a computer, what does it do? It computes. Okay, so if I have a strong enough computer and I have access to the data, I can ask the computer to do what I do on 40 stocks, and I have it done on 6,500. That's probably within the next 6 months. It'll be sitting right there or in there, and it'll do that for me. So I want to explain the process to you, and I want to use Nvidia, and I'll walk you through it. I'll show you the algorithm that I have built, and then you make a decision. Does that make sense? And if you do, then I want you to come to our website, sign up for our Platinum program, and gain access to not only what I call my cheat sheet, where I show you exactly what I believe the price is going to be at the end of 24, 25, and 26, and I show you what Wall Street thinks the price is going to be, and then I show you how I've allocated my portfolio among those 40 stocks to maximize my return and minimize my risk. Okay, so I have some stocks, like I'm predicting right now that Nvidia will double, almost immediately double from what it sold on Friday to where I think it's going to be on January the 1st of 2027. But I have some that are going to triple and quadruple. But there's risk there. They don't have the history that Jensen has and Nvidia, but the potential is there. Okay, I'm going to take you to the computer. You make a decision. In the meantime, get on the bus. Okay, so this is my algorithm, and I've focused it here on Nvidia. What I've done, I've had to go in and discount or allow for the 10 split. So you're seeing in earnings per share some pretty small numbers, and you're also seeing the price of the stock pretty small, going back all the way. Here's 2015. This is actually goes back to 2009. And I'm showing what their earnings per share were all the way back, as I say, to 2009 to currently. And this year, the earnings per share are at $1.30. And in 25, they're projecting to go up 111%, then go up 37, and then up 16%. So what they're telling me is their earnings per share are going to be $4.34 in 2027, as opposed to $1.30 today. So what I'm trying to do is to determine what is the price going to be relative to the price today. And as you can see, what I'm doing is I'm saying, okay, the PE ratio at $1.30, actually, the PE ratio at $2.74 gives us a price today of $113. So if I use the same PE ratio against this $4.47, I'm going to come up with a price of $226.52 in the future. Again, I'm comfortable with these numbers because I've studied the past performance. I've studied their revenues and how the revenues relate to their price and their earnings. I've studied their research and development, and I'm seeing that they're continuing to grow that part of the business. So I build a comfort zone that Nvidia is going to continue to behave in a similar pattern than it has behaved, particularly in the last 2.5 years. So with that in mind, I'm then comfortable making my predictions for probably the end of this year to be $154.73, the end of 2025 at $179.07, and at the end of 2026 at $226.52. And it's obvious that's a double of that. Okay? So that's how I basically determine what is the price going to be. Then what I do is I go to my cheat sheet, and here's what I do is I share with you my predictions accordingly. And we can go down here and we can see here's Nvidia, here's its current price, here's its market cap, this is its current PE ratio. Its future PE ratio is 41.26, and that's the number that I use. And then what I do is basically go through and do that. These are the numbers you saw over on my algorithm. This is what Wall Street is predicting the price will be in the next 12 months. So as of today and 12 months in the future, they believe it's going to be 132. I believe at the end of 25, it's going to be 179.07, and I believe that it's going to be at the end of 27, 226.52. That gives us an annualized rate of return between now and the end of the year of 43.62%. Then and as you can see, I do that on every one of the stocks in the bus. This is the bus 13. It's basically hardware. Software is the bus 13, and then these are my moonshots. Then what I do down here is I show you how I allocate my portfolio and my cost basis, and how I predict, based on the prices I'm sharing up here, what my portfolio is going to be worth when we reach January the 1st of 2027. So I'm allocating, and what I've done here is I've sorted the stocks based on those that are going to do okay. My total return on Apple will be 63%, but Acellus is 134, and then one of my moonshots in the green is Air Systems. And as you can see, for Nvidia, my total return against my cost basis is 143%. I suspect that at the end of the 2020 or start of 2027, I'm going to have $33,979, and this portfolio total will amount to just under $1.5 million. Okay, that's how I analyze stocks. As you can see, I only do about 40 because that's all I'm capable of doing. I can't keep up with it. Over here, I tell you how much of it is owned by institutions. I tell you what their 5-year average return is, and then I give you a score comparing what are the institutions doing. Are they buying into this stock? And since May the 10th to July the 15th, you can see that institutions have increased their holdings by 180% since that time. And I do that on every one of the stocks. So it's not just Kerry. It's me gathering the data that I have access to and my tribe has access to. Bob up in upstate New York actually presents me this information on a weekly basis. So that's how I analyze stocks. I would encourage you, recognize that the data is now available that wasn't available 3 years ago. So you need to change the way you look at managing your portfolio. You don't just go on some talking heads predictions because they have ulterior motives. I'm a talking head. I have no ulterior motive here other than to make money for myself. Why did I do this analysis of Nvidia? Because I wanted to know. I want to know for my determination and for my investment purposes, how much of my portfolio should I put in Nvidia? And that's totally determined on risk and reward. If it was all reward, and I didn't put in risk, it would all be these stocks down here that are going to give me some astronomical returns. Those are the bright green ones. But there's risk there. They don't have the history. I nor Wall Street have the confidence in them that I have in Nvidia, that I have in Apple, that I have in Amazon, and Google. We're pretty assured we're going to get some exponential returns, but not these extraordinary returns. I'm Kerry Grinkmeyer. I'm a retired financial advisor. I do this to help me make more money. I share this because I think you should be able to benefit from and not have to pay Goldman Sachs' price, which is 2% of your assets under management, and they take 20% of the earnings. All I ask for is $60 a month, and I'm willing to prove it to you and give you a 14-day free trial. Figure it out, see if it's right for you, and if it is, get on the bus.